we'll start off with some definitions because infrastructure for financial institutions is as vague as it probably can get, and so let's define what are actually financial institutions nowadays, what's infrastructure, and blockchain. I think we don't need to explain blockchain, but how this makes sense for financial institutions. And I'll show you two examples how we use this infrastructure for products. And then I think we're a nice and cozy group. Let's have some discussion and not too long of a presentation here. This is our core team and me. So on me, I have a finance and management background. I got basically by coincidence hooked on cryptos. A friend of mine told me a long time ago buy Bitcoin. I had no idea what it was, so I just trusted him. Always pay lunch for him. And so this was basically it. I didn't touch it for some time. My co-founder Michael, I know him from university back then. He's the smart guy, so he got really interested in the technology when talking about this. So he went to investment banking while I came back to Berlin and started my first company. And he built with our co-founder and CTO Samuel in 2015 already a loyalty program based on blockchain. So this was really pre-crypto hype and so on. And our CMO Carl, who's here, Aliyah as well, here in his team. So that's a team with an advisor board. Basically, because we're in the financial space, you need people who really understand the products and the pain points. Because when you look at a bank like Goldman Sachs, you usually think they must have excellent infrastructure, the huge IT teams, and everything runs super smoothly. But this is not really the case. So we have people who actually worked on the products where we built this infrastructure for several years, and also people from the crypto ecosystem, Switzerland, from Ethereum, and quite a great team. As I just briefly mentioned on Norbert, we are based and registered in Zug. We have it's called Betriebsstätte in German. It's a subsidy, maybe, in English, here in Berlin, where quite a big part of the team is actually sitting. Why are we in Zug? When we looked at the space and we're building the infrastructure for financial products, we're very close to the need of being regulated. And the FINMA in Switzerland, that's the SEC, BaFin, so the financial regulator, it's much more explicit when it comes to regulation, and if you get a question, they answer in quite a short amount of time, and they discuss stuff with you. This is not so much the case here, and so it was purely a regulatory decision to set up in Switzerland, so no tax evasion or because we like mountains. So, as I said, let's start off with definitions. What's blockchain infrastructure for financial institutions? So we're in the finance space. That's why we have a cool hat on the question mark. I hope you understood. So let's tackle this from reversely. Let's look at what is actually a financial institution. What's infrastructure, and let's not look at what's blockchain, or we can do this briefly, but why is this beneficial for financial players and their products today? So what's a financial institution? So usually, or depends really on who you're asking and probably where we are. So on a time range. So usually financial institution, what's that? Deutsche Bank, maybe it's BlackRock, an asset manager. So institutions which have been there for quite some time. They were created decades ago. Also the systems they are using, and they're very relevant for our economy. They get somehow threatened right now by big platforms, which apparently or possibly have the access to their clients in a much better way than the interfaces and relationships they currently have. So they're looking at Google, Facebook, Amazon, and Alibaba as a potential threat to the primarily retail consumer business. And I think the majority of them is not thinking about much further what other organizations might impact them, because the clients they are currently fearing to lose are regular consumers, and they're not thinking about self-sovereign entities, being it an autonomous driving car which needs a loan to finance itself. So, but this will be a possible client of a financial institution in the near future. So I think there are different hypotheses of how will this financial ecosystem change. We started off with banks. I think this is probably, we don't need to argue this. And we see these platforms entering, especially in China. Alibaba is much more relevant for payments than, say, Facebook in the US or Amazon, possibly in Europe. They're probably furthest. And so we actually believe that it's not going to be either one of them who's gonna be a relevant part of the financial ecosystem, but it will be a mixture, and it will be much more the question of how do the services these financial institutions currently provide will change over time. Because they all have certain aspects which are relevant for different products. For example, bank already has all regulatory requirements in place. Facebook has or other platforms have the direct connection to a large client base, and a DAO, for example, can actually interact with entities the other ones can't right now. So, so we see these all at relevant right now, but we are obviously primarily focusing on the first, on banks, of how to enable them through technology to offer products to be part of the game when we're in this stage. So this on financial institutions, infrastructure, what does this mean? Also, we're looking at this from right now. This, I think, the fax machine we actually had at home. That was the first one. So when you look at infrastructure at a bank right now, it's kind of silo-based. So every bank has more than one system to run different products. They have been established in the usually early 80s, and they needed to change over time and be connected throughout the different verticals of this bank. And then obviously there are a couple of banks, everybody has their own proprietary siloed infrastructure, and when they exchange something, so for example a security moves from one person, from one custodian to the other, there are intermediaries who actually facilitate and connect these systems. So one for securities is, for example, Clearstream. It's a subsidy of Deutsche Börse, and all settlement and processes are run through them. So everybody always knows who's actually the owner of a security, of a bond, and so on. So these silos are in a way connected internally, but they need external intermediaries to be connected to each other. So also, when we look at how this started, it was very easy to create first infrastructure in a bank to facilitate process internally, but over time this infrastructure grew and grew and grew. And we are currently, if you look at IT expenditure of financial institutions, 85% in average is being spent on maintaining existing systems. So you're left with 15%. I think this is actually even an overestimation of budget to create new infrastructure. Obviously there's a potential, and that's why we're here to think how could this infrastructure actually change. Because next to these existing silos, which will remain here, and the centralized system, which is absolutely relevant and where the majority of financial products are being facilitated through, we're looking at decentralized infrastructure for these existing organizations. So, blockchain. Why is blockchain technology interesting for financial institutions? When you look at these existing infrastructure, as I said, they have been built over time, and it's very hard to implement new processes and new tools into this existing infrastructure. And you basically have a chicken and egg problem that you need to connect a lot of people at the same time to have a relevant network. The advantage now that we can build something completely out of this existing infrastructure is basically just possible with blockchain, because these intermediaries, which I just showed before, like Clearstream, are not relevant in this whole system anymore. And I'll show you now an example how we build this and why this is changing. So the question is not really is this going to happen, but actually how long will it happen and how does it happen. This is the last of this really poorly made slides, I promise. After this I have a couple of sneaker ones Carl also built. And so we see that basically the future of the financial market not as a purely decentralized or centralized. It will be a mixture, and it will be interesting how we can connect these existing silos and infrastructures to products which will run completely on chain. So, see, there's a difference, right? So, what are we actually doing at Blockstate? So we're focusing on three different verticals: digital asset management, equities, and bonds and loans and derivatives. We started off with digital assets. So when we started to build the foundation, basically we saw that there's a gap between institutional investors trying to access digital assets because they weren't able to access them even because of a regulatory or technological barrier. So this was basically the foundation of infrastructure we built for this digital asset management space. And basically 70% of the modules we created, and I'll show you which ones, were the foundation for our product we're currently building. It's an on-chain bond. Derivatives, super early, so yeah. So as I said, we started off with the digital asset management business, and today is a really nice day because we got approval by a Swiss, it's a self-regulating entity. It's under the financial regulator, and you need the approval to do asset management in Switzerland. We checkmarked this today. So from today on, we're actually allowed to use this infrastructure for our first product. So our first product is an exchange-traded note that's somehow similar to an ETF, which probably everybody knows more or less. So it's basically financial product which replicates certain assets. So we used this ETN structure to make digital assets available in existing market infrastructure. So this means basically with a brokerage account you can buy digital assets because we hold them, we wrap them in this financial structure, and we make them available through the existing opaque systems, these old fax machines and Clearstream, to connect these two systems. And in order to do so, if we would have built something like a gold ETN, there would have been existing infrastructure in place. So basically, like when you create an e-commerce shop, there's probably somebody who provides a front end, somebody who has a payment interface and back end and so on. This was not really available in the digital asset space. So we had to come up with an institutional grade custody solution. We found out that, I mean, probably no surprise, but you can't use coin market cap prices to value your net asset values. Probably you would need to go to prison in Switzerland for this. We established a standard structure of how to issue smart contracts which hold these assets in segregated wallets. We connected basically different trading venues to our back end to have best execution to buy these assets. So we realized that was quite a lot of like basic infrastructure we needed to establish for this first product. And this is basically the foundation also for a bond we're currently building. So I'll just show you on an example. How does this work for exchange traded products? ETN is an exchange traded product. So we're basically using all of our modules for building this product. So we are here the infrastructure provider and the product house basically in two steps. And this is the first product we're building. It's called CTF15. It's an index product, so you can invest in the top 15 crypto assets. It's a bit like a DAX certificate, so there's a methodology behind it. So it's a passive product which selects the assets which are in this index. It's weighted by market capitalization, and it gives you great access to digital assets in a very transparent way. So this product is basically the first one which is built on our infrastructure. In the long run, so we don't see us as a product house building these single different investment strategies, but by providing the modules I just showed you to other asset managers, and for example a fund which is now using our ETN structure. So it's basically a solution for financial institutions. Second product, and that's the last I'll show you, is a bond. As you can see, we again need basically most of the infrastructure we built here, apart from the trading board, and we needed an extra module. I'll show you later. It's not in this beautiful ring. So what's an on-chain bond? When you again think about this infrastructure, we saw you have those silos and you have a lot of intermediaries who connect them. So if you're looking at how a bond is being built today, that's a classic off-chain bond. There's an issuer, that's a company. This company is basically issuing the bond. The bond needs to be placed in a depository by law, and then you have the clearing systems which always have a ledger of who is basically the owner of this bond. So when an investor buys a bond and it gets transferred, this Clearstream processor always needs to know who's the holder of the bond. So it's quite an opaque system, it's quite cost intensive, and for every transaction that is being made, there are other intermediaries who send the fiat cash payments through the system. You also have something like a calculation agent. It's basically just an entity which says, for example, what's the Euribor rate today. So you have quite a vast amount of intermediaries who charge for maintaining the life of this bond. If you do this completely on-chain, and this is, for example, in Switzerland possible, in Germany it wouldn't be the case, and this is why we're issuing the first one in Switzerland. You just need the issuer. We still need the underwriter, the investment bank, because it's the guys who actually know who wants to issue something and who wants to buy it. So it's not I think there are a couple of projects who just want to create a platform and everybody just meets there. I don't think this is very realistic in the near future, but I think you still need the relevant parties to bring everyone together, but you don't need this old infrastructure. So in our example, you just have the issuer, you have the investor, you have the investment bank orchestrating everything. But when we issue a bond, it's issued completely on-chain. We don't need any existing market infrastructure. It's completely legally compliant under Swiss law. You don't need a paying agent, you don't need the clearing system, you don't need a calculation agent, and this saves a lot of costs. It doesn't hurt the business of the investment bank, so which is a good thing for us to actually get this rolling. It just cuts out some intermediaries, and it facilitates actually also the process throughout the lifetime of a bond, because when you have something called like a corporate action, so basically it's the issuer who needs to communicate for a certain event with its investors. How does this work nowadays? He calls the bank calls the clearing. Call is wrong actually. They either send a fax or a letter, and the clearinghouse contacts the custodian, and the custodian contacts the investor. So and usually you have some entities all over the world, and it's like a standard process, and this is what I said in the beginning, which no one believes when you look at large institutions, that people are chasing and looking for faxes to actually create a paper trail that a corporate action was actually valid. So what we surprisingly found out that it wasn't only the cost saving, which why our partners want to actually issue this bond on-chain, but was the process currently used, which just created, imagine it's just people working like an average income of $1 million a year, trying to find faxes and going through Excel sheets to contact persons. So this is two examples of how we use our modular infrastructure for digital asset management, also for a bond. A bond is very similar to a security, to be honest, so this could be something what we also might look at into the future. So broad timeline. So first product is as of today. We can sell it. We'll issue the bond in Q1 next year. There's a lot of stuff on this map we're looking into. Very much focus on these two verticals though at the moment. That's about it. So happy to hear the questions, and also you might disagree completely. So looking forward.